The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi, folks. Basil Chapman sitting in for Larry Pesavento, and I have the show just before his, Monday through Friday, 11 o'clock till noon, 877-927-6648 is the same number to call. Most importantly is today being the commodities hour, the futures hour, and he also looks at commodities. I'm going to do the same. In my show, I looked at a number of stocks and stock indexes. Right now, we're going to look at this. I just want to quickly, for those of you who are new to Larry's, new to my work or my voice, originally from South Africa, been here many winters. I'll speak a little slower, so maybe you can grasp those words. A little Dutch English style there of linguistics, and I use a methodology on TFNN. There's a CD that I have called Introducing the Chapman Wave Methodology. Basically what I look for, let me just skim right here. I look for, you've got bars, candlestick bars, or regular bars, and it's very difficult to tell what's going to happen with price movement. What I do is identify the lowest, most obvious low bar, and from there on, I merely count each successively higher peak. I label them capital on the upside, A, B, C, D, E, F. It can't even go to a G. And on the downside, lowercase a, B, C. I have a newsletter called The Opening Call. Very comprehensive newsletter. I cover a lot of things. Don't often have commodities. Sometimes have commodity-related stocks. But I do every single day. I show the E-minis in the 120-minute chart. Let me just go there now. E-mini, 120, right here, ESZ. And I explain what the parameters are, what the method, how we're looking at the methodology of the Chapman wave, how I put in the down arrows or the plus signs or the little caps when there's an extension that's gone beyond what was a sell signal, and how I use the MACD, the moving average, convergence, divergence, and the slow stochastic that's at the bottom there. More importantly, when you get a D or an E, you have to be careful. We've got an E in the E-minis right there at 1726.75. Now it's pulling back, and it's pulling back underneath the black line, which is the 9-period moving average. There's a faster moving average just there, a little thin line, a little red line there. And that's saying, be careful, there's some downward pressure. Until it goes below the black line, you will feel that pressure is limiting the upside. But considering the huge move we had yesterday, this is still fantastic action in the E-minis up until now. Now, here I have to be a little careful because in the Chapman wave methodology, to go back to the CD, this is slide 12, when you get to a D, you've got to be careful. In the Chapman wave song, which is called Buy at the Low and Sell at the High, which we usually sing at big meetings or in my Master Trader series, it says, there's a whole preamble, but then the third paragraph says, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. So that's what you got to do, because it could keep going higher, as it did here after peak D. It went to an E and an F. That's what I call the camel hump. I don't have to talk about that right now, because it's not applying to what we're talking about, but I just want to explain what we look for. And you can use chart formations. Look at this chart formation right here. This is the 10-minute, I believe. Whoops, where's my 10-minute? My naked chart here, the 10-minute. Will I find it? Yep, there's the 10-minute naked chart. And what you do is you look, there's that pattern that I call the Eiffel Tower. Uppercase A, it goes straight up. The E-minis went to a peak D. Peak D goes to a false breakout to peak E, fails, makes the double cup formation, and goes to another peak D. Plumbers goes to a trough D, and now it's gone to EF, and that is a G. At a G, you usually get a much stronger bounce, or it recycles, continues down. You know very quickly if the geez, look, that's the strongest bounce we've had so far, at least since 11 a.m. So we're going to be watching this, and I drew in this pattern earlier on to say there could be two H patterns, lowercase h patterns. So there's my preamble. Now let's go to what I'm looking at here. This is the E-min. It's in leg D with a potential doji candle here. Says to me that because the Dow cash, that's the Dow Jones, is in leg B, probably making a peak B today, that somehow or other the E-minis and the SPX.X, which is in, oops, where did I go? Oh, wrong chart, SPX.X, SPX.X, is in leg C because it made a nominal new high today, tells me that we're getting closer to alignment, that over the next 2 days, the Dow could pop up to a new high to make, if it doesn't do it today, to make leg C. That'll be in concert with the leg C and the S&P. I'm looking for a D and maybe an E. And then we've got to be real careful. We've got to be looking at a potential downside action. And the downside action, based on this particular technique, doesn't give you the price. Another set of techniques does that. But I use another couple of tools, and one is the MACD, the moving average convergence divergence, and the slow stochastic. And what did that say? I spoke about this about a week ago. No, it was actually a little bit more than a week ago. I said there is a potential squash. I call it a squash in the Dow. Let me just go to this here. You'll see I've typed it in. Chapman wave squash. And what that says is that within this concept of the different moving averages, the slow stochastic is so powerful, holding in the 95% area and having gone up so quickly, over 80%, with the MACD crossing positive with that green line, the fast-moving average, crossing the slow line, the red one, that it takes you invariably, it takes you to a leg C quite quickly. And then what happens, the slow stochastic, and this blue line here is the key that says, could we have a bit of a pullback here? Says that there could be time taken before you get to the D, and then maybe you'll still make an E. But the stochastic, consider it the torque. It is your first and second gear. When you get to the other gears, the MACD has to take the momentum over, and that fast-moving average is what does it. I hope that clarifies something. It also means that in the wave count, in the Chapman wave count, my monthly chart, which should be a G, rarely do you get a peak G in weekly charts. You have to go back and find that you missed a recycle or something. I believe that this is a technique I call the instant restart. What is the instant restart? My CD, the instant restart, find the instant restart. That's the chapter. But we could also just go to the chapter right here. It says instant restart is, in fact, chapter, I believe, 19. Right there. And you can go, you can either find it that way, or you can just go straight to the instant restart. And what does it say? It says that within 3 bars after peak D, there is such strength that you quickly go to a new recovery high. And that recovery high, like there, is labeled E/A or E, A, or AE. It doesn't matter. The fact is that it's recycled and it's a powerful move that says you've now got the opportunity to be looking at the price that you're looking at as being in a mode that takes you to quite a lot of higher highs. It could be EF, recycle, goes to a C and then a D. So I'm looking at this and I'm saying we're in this up channel. You see those trend lines, and that's very powerful. It says also that the weekly chart, low of 1639 on the S&P, that's 90 points down, 80 points down, should not be taken out. That in fact 1676 area will be very strong support. It is after that, I suspect in early October, that we're going to see some kind of a sign that says, whoa, be careful. Now you're going to get your very strong single-digit or maybe double-digit pullback. That's the way I'm looking at it. All right, let's go through other things at this particular point. I want to go through the euro, EUR-USD. Using my technique, buy signal down on the 9th, on the 6th of September at the 1.31039 area. Stochastic turns up over 20%, MACD turns up, and it goes to peak A, B, C, and now you're in leg deep potential doji. Says be careful, there can be halfway markers or turning markers. So I'm being a little careful here. The 120-minute chart, I don't think I've updated. Oops, the wrong one. Updated 10-minute chart. Oh, I changed that. That was going to be ESZ13. Okay, let's just stick that over there, put it away, and let's go to the thing. Here we go. So we're back to the euro, and the euro says I've gotten a peak A, B, C. Is that right? Let me just, I don't want to miss anything. Your only objective here is to, take it from there. Of course, A, B, C. This is peak D. So there it is, peak C, peak D. Put a plus sign. I always put plus signs over D and E unless I put a down arrow, because the stochastic is still up in the 88 area and the 80% area, and the MACD is just turning down. I can't put a down arrow. I can only put the plus sign. So it says the euro has very strong support. It's at 1.352, round about 1.351 to 3.50, 350-ish, let's say. That's going to be the area. But if it takes out this candle low of 1.349, the low of at 6 o'clock on the 18th of September, it says the trend line that we were looking at as previous resistance has to be considered support. That can go all the way down to 1.35. I don't think right now we're going to do that. I think we're going to make an E just above it, and then we've got to be careful. But the stochastic is at 86%. If it suddenly turns down like it did there, that'd be a big negative at that peak E. Now, let's go to the USD JPY. This is the currency pair, the dollar Japanese currency pair. Peak F top, 100.602. Pulls back. See the MACD. See the stochastic. It says, watch out, and watch out it is. And then suddenly today it has a very big spike. I have to call this gray A. In other words, once it's underneath that F, it's a retracement failure mode. That explains it. It's not a negative connotation. It just says it hasn't gotten back to the new high. But it does say, I am perhaps trying to trade within a band, and that band says right here, band says right there. That's the band I'm looking at. Oops, I've got to raise it a little bit. Sorry. Right there. If in the daily chart, in fact, there is a rally that takes it above 99.97. It's trading at 99.42 right now. This is the 19th of September. If it goes above that, there'll be a retest of the 100.60 area. I'll be right back. Basil Chapman sitting in for Larry Pesavento. Dow's down 28. S&P's down $1.31. We'll be right back. We'll look at bonds and many other things.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks, we're back. Basil Chapman sitting in for Larry Pesavento. It's a great honor. And a couple of things here. Don't forget, Friday week, you've got Steve Rhodes. He's giving a Master Trader series. You know, we're all about education here at TFNN. We've got Tiger University. And, Steve's come up with numerous different techniques. And he very often he likes to take techniques that he's observed and he tries to modify them. And he develops his own way of looking at these things. And he 2 hours of teaching that he does every day. So just consider that your obligation to yourself is to spend a little money to be able to hone your craft. What if your disc brakes needed replacing tomorrow? Would you say, they're okay, it doesn't matter? No, it's part of your lifestyle and your life. So you would get them replaced, and whatever it costs, you just have to do it. This is part of, imagine not paying money to be able to keep yourself in the game. I think these things, these Master Trader series are extremely important and extremely informative, and you always come out with something new, something that you can use. And if they are vibrant and they are robust techniques, within days you're already starting to make back whatever it costs you. So please consider it. So I'm going to go back here. We were looking at if I can just find it here, we were looking at the euro dollar. I know I finished the euro dollar, EUR USD. Yeah. So that's going to consolidate a little bit. I think a little higher prices, and then it has a deeper pullback. But in the meantime, up mode remains in place. And then I went to the, I wanted to go to the AUD USD because I think I heard Daryl talking about that. Yes, they had a spectacular move to the upside. Peak E being made right now. Weekly chart starting to improve. It says it's tremendous support at 0.93. It's at 0.94 right now. I don't want to actually see it get to that level, because I think if it can get to just 942 and then start to move higher, it's going to create some kind of a flag sideways formation, and that would be the best thing, because if it starts to break down, if it goes back under 91, it's not going to be a good thing, and that'll also imply that the weekly chart is starting to match very much. Look at this. Look at this. Keep your eye on the week, on the right side. That's the monthly. Look at that. That's the gold chart. They could start to match. So now I want you to do something else. I said bonds. I'll go to the bonds right now. Something was mentioned in the den about the shippers. We'll look at some of those shippers in a moment, because they are really on a tear right now. Let me just do this. This is bonds. Bonds have made a very quick A, B, C. Peak, peak A to B to C. Now, what's important about this is that I'm going to show you something here on the continuous contract. Now, I know a lot of people say, hey, continuous contract gets smoothed out. Hey, I don't care. I've used it for, I don't know, 15, 17, maybe 20 years, continuous contract. More than that. I consider them, they give you the right highs and lows. They get smoothed out, so the price always changes, but not the waveform. We've made a peak E in the monthly chart of the continuous contract, and that peak E was back in July of 2012. Since then, what have we done? We've come right back, and from that, this is what I call, in my CD, introducing the Chapman Wave methodology, there's a pattern that I call the, let me just find it here, the inside track. Do I have inside track? Inside track. Let me just find that here. See that? You see those that red line and the little dashed line? That's the cell repellent zone. See the green dashed line and then the green solid line? That's called the buy zone or the propellant. And as long as it keeps bouncing like a little ping pong ball in that channel, it stays there. That's very important. So what I'm going to show you now is that this 28 or 31-year up channel has also within it a very strong inside track resistance, but it's now got an inside track support level. And if bonds on the continuous contract go under 126, they're trading at 131, right? 131.5. If they close for 2 weeks underneath 126, that'll be negative action, especially 125. But the stochastic at this point is down in the, I wouldn't call it the buy zone, but it's in this zone where it could at least give a bounce. The MACD is still very negative, and that says to me that there could be a rally, and that rally should try to hit 136.5, and then it could start to head down in that H pattern that I often talk about. So I'm watching bonds on the longer term to intermediate term, and this little cluster pattern here in the weekly says that, well, we've got a break coming up. After the break, I'll talk a little bit more about that, and then we'll look at the shippers. I'll be right back. Basil Chapman sitting in for Larry Pesavento.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. Talking about test driving. This is an instant restart right here in Tesla in the weekly chart. This is now leg C up, and it should go even higher. This vertical move right here. This reminds me very much of stocks that we saw back in the 1999-2000 period when IPOs came out and just started soaring. I'm trying to think. Someone reminded me the other day of the stock I was talking about. It was Omega, no, something. It was data storage, I think. Well, I can't remember it right now. Anyway, so this is the pattern I'd spoken about the other day, in the oval pattern in the Tesla chart. This is up 12.44 at all-time highs. See, when you've got what I call a sexy stock, a stock with a panache, a sort of something that the layperson is going to gravitate to, they also shorted tremendously, and these shorts get squeezed. So you've got to be careful. Now, let's go back to what I was looking at. Of course, I've got to remember what I was looking at before. The bonds. Bonds right there, right there. So the bonds right at this particular point, I wanted to look more at the continuous contract because that just gives me a lot more data. Now, look at this. It's in leg B. But this particular pattern is not, that can't be B. That's not an E. Let me just double check. Yeah, I think it went to an E. Yep, it did. So that was a lower low, 128.12, 128.15. So now this is leg A. This particular pattern here can often become a cluster pattern, like a tight ball that says, I want to spring to the upside. That says the weekly chart has the potential only if it's speed that counts in this particular move. By next week, it has no choice. It has to be above 133, I'd say 134. It's only 2.5 points. It's not a big deal. It should do that. If it can't do that, then we're going to start to see this move sideways and start to take out that trend line in the monthly chart. Meantime, the daily chart, this is going to be brand new A. Yep, that's A, B. This is leg C. So we've got a leg C in the daily, matching many of the other charts that we're looking at. But it's not a big deal yet. It is the start of something. And it really has to take out those left side highs to show that it has staying power. It has torque and momentum. Right now it's just got torque. Torque means nothing unless you can follow through. It's like going uphill and you start off and then all of a sudden you lose your clutch. What's the point? Okay, now I Omega. That's it. Thank you, RJ from Seattle. That's exactly I Omega. Got some good stories about that. Anyway, I'm not into stories. Let's go to the U.S. The bonds. So we did that. Now I said that I would just review gold. I'll do that in a moment. Question came. There's many shippers, and what I had spoken about 2 weeks ago, I was saying, I don't understand this. If the shippers are starting to show signs of some strength, and what was the other thing? And then all of a sudden you're looking at the steels and the aluminums showing some strength, I can't be that bearish. Any further decline will just retest the recent lows or maybe go slightly lower. And then all of a sudden, bar 9 in this match between the left side and the right side of the Dow chart right there, and right there, 9 from July the 7th, was it? July the 8th, and bar 9 from September the 11th, and the Dow said, you are wrong, mate. This is going to really move, and that's where we had to change from short positions to long positions. Now, I do have a short position on right here on a particular index, a sector, really. We did it before, and it was a fantastic game. We only made a little money because I held it too long because it bounced so strongly. I'm trying it again, and I think it might work, but we'll see. Down back at the ranch, what we're looking at here is you've got NAT. That is, I always remember the symbol, forget the name, Nordic American Tankers. It is just getting off the bottom. I would say that if you want to nibble at this stock, it's at 841. Put a stop in of about 790 initially, but as soon as it gets to 850, if it does that, especially if it goes above 855, the high of the 9th, you can raise that stop. In fact, at 856, I would add another small position because I think that this is starting to show. This is that single leg A syndrome that I talk about in the weekly chart, and that's exactly what the GLD has done. Look, oops, the GLD has done in the daily chart. In fact, the single leg up is in from a low to a high. So this doji is going to be really important. I'm looking at the GLD and I'm saying, I'm talking chart patterns. Remember, I happen to jump from one to the only because I'm talking the single leg A syndrome that I identified years ago. You see it in the E-minis when there's news at 8:30 in the morning, and then it gives most of it up or all of it up. And if it holds at a certain point, that's very positive. So what we're looking at, they say 130.47 to 129.60 has to hold in the GLD. If it starts to take that out, this is just a single leg up, and all that's going to happen is going to make another H to an M pattern. So let's go back to what we're looking at, NAT. So that's NAT, and what's the upside? Well, the monthly chart is just horrible. There's that cluster pattern again until it takes out $10.47 on a monthly basis. So this thing could just go sideways and give false breakouts. So as a trade, fabulous stocks to play. We actually have one as a trade. At least it's starting off as a trade. We'll see what happens. Then what did he write in Eagle? E-G-L-E. E-G-L-E. Eagle, I had updated it. Why did I not update it? What happened? Eagle is Eagle Bulk Shipping. This is already moving. So let me just do this real quickly. Chapman wave. Look for the lowest low bar. Give it an up arrow because you can already see that it's moved higher. A, B, C, D. D's what you expect, and D's what we got. Pulls back, start another buy mode. Buy mode right there. I think it's this one here. 331, 330. Nope, it's that one. Good. So A, B, and it's in leg C. So on the daily chart, it should still go to D. This is a good one. Eagle trading at $8.66. Oops, $6.66. Hey, wasn't 666 the low of the S&P back in March of 2000? And you remember using the Chapman wave, we got the Dow the exact day, the 6th of March, exactly at the low, and we held that for months. Months. It was actually much more than months. It was half a year, about a year, or half a year, I think. Eagle is in leg D in the weekly, but with technicals improving, it's the monthly chart that is starting to show signs. This is actually leg D. It's the only one so far that's gone. A, B, C, D. So it's a little more mature, but in this case, you want maturity because you want to get an up arrow, and that up arrow is there because you've gone to a D. So this is Eagle is probably one that has already shown that it has turned the corner. The ship has turned the corner. And, of course, we're talking super tankers. So that's that. Now we've got our first caller. We've got Lou in Nashville. Hi, Lou. How are you?
Hi. How are you, Basil?
Very good. Thank you.
Okay. I just wondering if you could look at natural gas futures.
Okay. So, so do you have a position now or not?
No, I don't have a position.
Okay. So this is what I'm looking at, folks. In the weekly chart, NGZ, that's the December one, has gone to a leg B, and it looks like a little doji candle. Monthly chart is still terrible, but there it had, almost like the shipper we were looking at, it went to peak A, B, C, D, sharpest pullback. That's what you expect in the Chapman wave methodology. Doesn't have to happen, but that's where it can and it did. Now look at this. The daily chart, I've been talking about this and saying that there's a chance based on not this December contract, but on my long-term continuous contract, that if natural gas is able to get into the 450 to the 5 area at any point over the next 6 to 8 weeks, that'll be the first sign that there could be a much longer and higher rally. So that's what I'm looking at. On the weekly chart, the continuous, we've got the same, almost a doji candle, but we have to wait for tomorrow at 4 o'clock to know. Now what we've got is a chance that this is not, it could be, I've got it as leg C, but it could be recycled and it could be an F to a G. At this particular point, I'm going to call it a C. And what I'd said to Lou and to our previous caller last week who wanted to know about natural gas, who was in fact long, I said I'm looking for a target. If it's able to break above the 3.719 in the continuous contract, I'm looking for it to try to test the 200-period moving average of 3.807. Well, today it hit 3.820. It's achieved what it needed to do. That now is a tag. One tag is good. I need a close above it, and then it becomes support. Then there should be a pullback under it, and it should hang around there like that cluster pattern we were looking at before as it tries to turn the 200-period moving average into an eventual support level. So this is what I'm going to suggest, Lou. It's gone higher. It's done what it wanted to do. I don't know if it's going to go sideways and have one quick tag of the 3 points. It went to 3.82. Let me talk about the one that you would be looking at, which is the actual contract itself. I don't know. And that stopped. That went to 4.041. I suspect, and this is, here it's only B. Yeah, that's interesting. Okay, and it can't be anything else. Yep, I have to call it a B. I'm going to make the suggestion that if natural gas gets into, this is the December contract, into the 3.85 to 3.858 to 3.843 area, that you just start a small position. Now, do you like to buy it, or do you want to buy calls?
Calls.
Calls. If you're looking at calls, I don't think that it's going to make that much of a difference, either a point this way or a point that way, if there is the chance that over the next 6 to 8 weeks or 10 weeks, natural gas has an opportunity to get into the 450 to the 520 area. And I really think this is the first time that I can say I think there's a chance. Before I didn't think so, now I do think so. So looking out, I'm going to ask you to consider just nibbling, starting a position, in a call position, about somewhere in the 385 to 383 area. Let's just imagine that over the next 2 days, tomorrow it suddenly closes at 3.996. Monday it pops up and it goes to 4.05, and you say, oh no, I've just missed it. Oh, what do I do? Because that's a possibility, because it's held the 9-period moving average so well so far, I'm going to suggest that you start even one position, if not 2 calls, maybe right here, but you knowing that you really want to put the better part of the position on in the 3.80 area. I think that's going to hold. I got a feeling that within a week or two, this thing is going to be at, it's going to climb above 4.06. It's going to get to the 4.12 to 4.20 area. If I'm correct, then your best opportunity to start nibbling is right here. So that's the way I'm looking at it. Where would I be wrong? I'd be wrong if it closes decisively under 3.72, but you'd be looking at a call that goes much longer. So I think that I feel quite comfortable in saying to you, maybe here it's just to start the position. So think about it. You don't have to do it right now, but that would be my preference to at least initiate. Also, the candle that's forming, this long wick, the moment the next price goes into even halfway into this candle, maybe 3.98 to 3.90, there's a really good chance it's going to test the high of the candle. So that's my recommendation. I do like natural gas.
Very good.
Hope that helps you.
Yes, it does, Basil, as usual. Thank you.
Thank you very much for calling, Lou. Always appreciate it. Lou in Nashua, we're looking at NG, natural gas. We're actually looking at the December contract, but I like to use the continuous contract, even though I know some people are dead against using continuous contracts because it gets smoothed out. I love using them. I use it in conjunction with both the cash and the futures. Hey, that's the way it is. So now let's go back to what I was looking at before. In those shippers, you've got, let me look at the list here, GNK. Did I look at GNK? You know, I always look at these hundreds and hundreds of charts. I don't remember which ones. Yeah, GNK is acting very well. This also has done Genco Shipping and Trading. It's in leg A up in the weekly chart, having made a low of 1.12, and now it's at 4.41. That's a big percentage move, but it's nothing compared to where it was. It once was up in the 29, could have been higher. Oh, it was once in the 80 area, 84.51. So this is just getting off the ground. And the weekly chart is in leg C, maybe probably a peak C by tomorrow, because I don't think it's going to close above, you never know, 4.98. And that says it should still go to D. Technicals are very strong. The daily chart is looking good. I've got peak C holding the 9-period moving average. I think this is going to have a quick spike in the next 2 days, about 498. We'll be watching that. And when I get back, we'll look at a couple of other things that are on my list. I'll look at high-grade copper, and I'll look at Chapman. I'll be right back.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks, back to the Futures Hour, the Larry Pesavento Show. Basil Chapman sitting in for Larry. Frontline Limited, FRO, another shipper. There's a double cup formation that says it should try for the 3.17 high. It's trading at 281 right now, $2.81 of the 25th of July. If it's able to take out 3.03, then there's a really good chance that it'll retest that high. That's the daily. The weekly chart is in leg B, and it's acting okay, but it needs to break that pattern to start leg C on the upside. Monthly chart is nothing to discuss about it. It's just worse than horrible. So it has a lot of room to grow. This is a stock that was once in the 36 area. So that's that. The other one I was asked about is DRYS, dry ships, trading at $3.64, hit $3.75. In my opening call, we are long this from about $2.95, 96 cents. So this is a very nice move, fabulous percentage gain, 24%, something like that. Of course, you never know with these things. They give back just as quickly as they gain, but the weekly chart is good, and it's that monthly chart that I love. That's the reason why I want it in, because the moment it takes out $3.84 on a monthly basis, closes above that, suddenly you can start looking at a double cup formation that says 434 is a possibility, as long as the technicals are starting to improve in the stochastic and the monthly chart, but the MACD and stochastic and the weekly chart and daily chart are really strong. They're looking very good. Now, I had a quick email. is now a good time to get into the SLV. Let's have a look at the SLV. I did not look at silver. I thought I'd look at platinum and copper, but let's just go here first. Trough E, and it's making a doji high. I'm going to make the suggestion that says SLV, in some ways, at moments acts better than gold, and in other moments it doesn't act as well as gold. It went to its 200-period moving average in the monthly chart and is bouncing off. It says that silver has a chance now at 22.35. If it can take out 24 resistance, has a chance to trade into the 25.50, 25.60 as a counter trend bounce. I'll make the suggestion, as I did before, start just the smallest position on SLV. You already want to look at it at 21.92 to 21.50. It's at 22.36. That's the silver iShares. Why? Because that's the moment that I would put a 1-point stop in, because if it takes out 21.50 support, 21.40 support, that's at single leg A up failure. So just be somewhat careful. Now, I just wanted to quickly look at high-grade copper, because copper, if copper starts to come on strong, that's going to be saying improvement in world economies. Strong means you can't just keep making this lowercase h that goes to an M pattern. It means you've got to break to the upside in the continuous contract. Let me just go to the Z, December. Maybe people trade October, I'm not sure, or November. So anyway, the Z says it's got to close above 3.3950, close above it. If copper over the next 3 weeks is able to get anywhere into the 3.46 area, then suddenly, for the very first time since it broke down back in the week of the 22nd of February, the 200-period moving average, it's almost like a little butterfly or something. It becomes, like honey, it becomes an attractor to the hummingbird. So 3.5883 would be the target. Meantime, what would be the support? If that candle wick is broken and it trades anywhere, it's at 3.34, goes into the 3.28 to the 3.26 area, says no, just an H sideways pattern, rectangle formation, nothing big. I would love to see copper strengthen. That'll be a good market positive. So let me just review before we run out of time. Basil Chapman, host of Tiger Technicians Hour. I do the opening call. Wednesday, this coming Wednesday, here at the Boston area at MIT, I will be giving a presentation. You'll find it on the front page of TFNN. I'm the guest host for the 10th anniversary of the Boston Investors Group over in Cambridge, Mass. All the details on the front page. Wednesday, the 25th of September. Thanks for being here. Stay tuned for Daryl. Great show coming up, and all the shows on TFN. I'll be back tomorrow.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.